Welcome back to Investing Talk podcast.
Today we're looking at stock. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. This company is, well, it's going through a really significant identity shift, you know?
Yeah, absolutely. And how they handle this shift, that's really the key thing. It determines if they become a big player or just sort of fade out.
That's a good way to put it, because historically, stock was known for, well, fairly straightforward stuff.
Right, like cryptocurrency mining, selling some energy, basic data center space. Functional, maybe, but not exactly thrilling.
Not thrilling at all. But now, suddenly, they're on everyone's radar because of this one huge strategic move.
The pivot to AI infrastructure. That's the story now.
Exactly. And this isn't just like shuffling some resources around internally. It feels more like a total transformation attempt. The whole investment case really hangs on this AI provider identity.
Okay, but talk is cheap, especially in tech. What's the real tangible evidence of this commitment? Is there hardware?
Oh, yeah, there's hardware. Big time. Back in October, they finalized a major purchase Supermicro systems loaded with those NVIDIA B200 GPUs.
Ah, the B200s, okay.
Yeah, and that's the foundation for what they're calling the Tier 3 NeoCloud AI initiative. So they're moving beyond just storing data.
Right.
And into the heavy-duty computing needed for, AI models and complex stuff. High demand, potentially high margin.
So positioning themselves against the bigger cloud players in that specialized niche.
That seems to be the goal, and it's not just a plan for someday. The first part of this new setup is supposed to go live at their Alabama site in Q4, so this year.
Okay, a hard deadline then, something the market can actually track.
Definitely. And we actually saw some early signs financially, didn't we?
Yeah.
Back in the Q2 results.
Yeah, that's right. Revenue growth looked pretty strong year over year. And maybe more importantly, for a company spending big, they managed to narrow their net loss a bit, showed some operational efficiency.
And just to touch on their old business for a sec, they did slightly increase their Bitcoin holdings in September. Went from 100 to 112 BTC.
Okay. Small move.
Yeah, minor, really. But the market might see that Bitcoin stash as like a useful liquidity buffer, something they can sell quickly if needed while they're spending on this AI build-out.
That's 18net. Okay.
Yeah.
So let's unpack the numbers now, the financial health check.
Right.
Because this AI shift, it's a big bet, right?
Yeah.
And you need the funds to back it up.
You definitely do. And the momentum part, well, they certainly have that. The growth numbers are, frankly, pretty wild.
How wild?
Okay, so fiscal 2024 revenue hit $37 million. That was up over 41% from 2023. Solid growth.
Okay, 41.7%. Yeah.
Good start.
Yeah.
But then Q1 of 2025, revenue more than doubled just from the previous quarter. That's 115% sequential growth.
Wow. Okay, 115% quarter over quarter. That's explosive.
Yeah.
Explains why the stock price took off.
It really does. And you knew there'd be a but the profitability side is still, let's say, challenging.
Right. The bottom line. Always the catch with high growth stories. What are we seeing there?
Over the last 12 months, they posted a net loss of nearly $19 million. So the net profit margin is sitting at a negative 58.85%, almost negative 60%.
Oof. Okay. So burning cash to fuel that top line growth. Classic Silicon Valley playbook, maybe.
Pretty much, but there's a bit more to it. Like you mentioned, management does seem focused on efficiency. Those annual losses in 2024, they were actually down almost 70% compared to 2023.
Okay, so they are making progress on controlling costs even while trying to grow. That's important context.
Very important. And what really gives them the breathing room to attempt this big AI gamble is their balance sheet strength. This is a key differentiator.
Okay, how so? What's the safety net financially?
It's actually really simple. They have zero debt. 0% debt to equity. In this industry where everyone seems leveraged to the hilt, they have none.
Wow. Okay, that is significant. No interest payments, no covenants to worry about during this transition.
Exactly. Huge flexibility. And that's backed up by a much better cash position, too.
How much better?
Well, they went from around $29 million in cash at the end of last year to reporting $85 million in liquidity as of October 31st.
So they almost tripled their cash on hand.
Yep. And that $85 million, that's the war chest, right? It directly supports buying those B200 systems and building out NeoCloud. It helps ease those cash burn concerns, at least for a while.
Okay, that makes a lot of sense. So we have the story, the AI pivot. We have the funding boosted by that cash raise and zero debt. Now, what about the near future? What events should investors be watching? the catalysts.
All right, the next big one is coming up fast. Q3 2025 earnings. That's scheduled for November 14th.
Okay, and what's the market looking for there?
Continued strong top-line growth, double digits year over year again. But just as importantly, signs that those losses are still shrinking. Any disappointment on the efficiency front could really dampen the mood.
Got it. Keep narrowing the losses. What's next after earnings?
Then we roll into December, and the focus kind of shifts to institutional investors. You've got two key things. The 13F filing deadline mid-month.
Right, where the big funds have to show their cards, show what they own.
Exactly. We'll see if the hedge funds and big managers have been buying stock shares. That reveals real conviction. And then closer to Christmas, around the 23rd, there are major ETF rebalancing dates.
Which can also drive significant trading volume, yeah.
Definitely. Then looking into early next year, probably around January 10th, we'll be watching for their 2026 guidance, specifically on AI infrastructure spending, their CapEx plans.
So how much more are they planning to invest? Are they doubling down on NeoCloud or maybe being more cautious?
That's the question. And beyond those scheduled dates, you always have the speculative stuff swirling around.
The rumor mill. What's it saying now?
Well, there's persistent chatter about a potential major strategic AI partnership announcement. Landing a big-name client or partner would instantly validate their platform.
Yeah, that would be huge validation.
Yeah.
Anything else?
Some unconfirmed reports suggesting that big institutional investors might already be accumulating shares, maybe quietly getting in before those 13Fs become public.
Interesting. Trying to front-run the news.
Could be. Plus, you hear speculation about structural moves, maybe an uplisting to the Nasdaq Q for more visibility. Or perhaps spinning off the older crypto mining assets to become a pure-play AI and data center company.
Lots of possibilities.
Mm.
So, okay, let's connect this to the stock chart. How does the technical picture look after all this news?
Technically, it looks very strong. You saw a really powerful bullish breakout pattern. Remember, this stock came from under $1 within the last year and hit a high near $6 recently.
Yeah, that's a massive run-up.
Huge. And importantly, the shares are trading well above both the 50-day and the 200-day moving averages. That tells you the momentum is quite solid right now.
And sentiment generally. Analysts, retail.
Generally positive. The analyst consensus rating is actually a strong buy. And you see the retail interest, too. Trading volume is high, averaging almost 4 million shares a day. And there's a lot of positive buzz on, FinTwit and social media about the AI potential.
Okay, sounds almost too good to be true. Which usually means we need to talk about the risks again, especially the volatility.
Yes, absolutely. This is critical. This stock is not for the faint of heart. The volatility is extreme. We're talking a beta of 9.92.
Whoa. Okay, 9.92. Remind us again, what does a beta close to 10 actually mean for an investor?
It means, historically, if the broader market, like the S&P 500, moves up or down by 1%, this stock tends to move, on average, almost 10 times that amount.
10 times. So swings are massively amplified.
Massively. Great when it's going up, obviously, but incredibly painful on the way down. It makes the stock super sensitive to overall market shifts and news flow. It's really more suited for momentum trading strategies, not buy and hold stability.
Okay, a crucial point. So let's just hammer home the key risks one last time.
Right. Number one risk is still execution and the funding for it. Despite that $85 million cash infusion, they are still losing money operationally. They absolutely have to get that NeoCloud AI infrastructure built, running, and generating significant revenue quickly.
Or else that cash burns fast.
Yeah.
And they might have to raise more money, potentially diluting shareholders or taking on debt.
Exactly, losing that zero debt advantage. And the second major risk is simply that extreme volatility we just discussed, tied to its sector. Tech infrastructure, crypto exposure. These are volatile areas. If the sector pulls back, that near 10 beta means this stock could get crushed much harder than the average stock.
Okay, so pulling this all together, the final assessment, where do we stand on stock?
Well, considering everything, the explosive revenue growth, the strong technical picture, that pipeline of near-term catalysts, the overall investment thesis, has to lean pretty bullish right now. We probably rate it maybe a 7.5 out of 10 on the bullish scale.
A 7.5. Okay, so who should be looking at this stock then? Who's it right for?
It's kind of interesting. It seems to appeal to two different types of market participants, really. You've got the short-term traders, the ones who thrive on that high volatility and want to play the news, the earnings reports.
The momentum crowd.
Exactly. And then maybe you also have some longer-term investors who are specifically looking for exposure to the AI infrastructure build-out, and they're particularly attracted to that unique debt-free balance sheet in a scaling company.
So for both types, the absolute key thing to watch is, can they successfully launch and monetize NeoCloud before they run out of that cash buffer?
That is precisely the tightrope they have to walk. It's more than just switching from mining Bitcoin to hosting AI. It's about proving they can execute a complex, expensive transition into high-tech services efficiently without, leveraging themselves into a corner.
Which really brings up one final thought for you to consider. If stock does manage to land a big client for NeoCloud, validating their strategy in the next quarter or two, how long do you think it takes before that zero debt profile makes them a very attractive takeover target for a much larger player wanting to buy, not build, in the AI cloud race?